Good afternoon. Welcome to Midcap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. For the markets, it's a day in the red, 170 points lower on the Nifty. But there was a recovery from the lows, especially on the mid-cap side. But still, this index is underperforming. So we'll see which way things go now.
You're absolutely right. The good part is, like you mentioned, there's been quite a bit of a recovery from the intraday lows or the opening lows, and that is something that gives a little bit of solace. But first up, let's have a look at the headlines. Iran's attack on Israel spooks the market, heightening geopolitical concerns. Even as the Russia-Ukraine conflict continues, PSU banks and IT are the big drags, even as metals, along with oil and gas, eke out some gains. Mid-caps underperform.
Anand Rathi well trades higher after a good set of fourth quarter numbers. The company exceeds FY24 guidance in terms of revenue and net profit. Management tells CNBC-TV18 that they are trying to create market-agnostic business in financial services.
Ramakrishna Forging secures an order worth 270 crores for developing Vande Bharat train sets. The stock surges over 5%.
ISMT surges after securing two contracts worth 344 crore rupees from ONGC for supply of products. The stock gains nearly 6.5%.
Aster DM Healthcare surges in trade after the board approves a special dividend of 118 rupees a share. The management tells CNBC-TV18 that 80% of the proceeds will be via a special dividend, while 1,050 crore rupees will be retained by the company.
Okay, all right. Those are the top headlines that we are tracking. But of course, markets, they continue to be in focus because of the geopolitical tensions that we've been talking about. But our own markets, they've seen quite a lot of recovery from the lows. The Nifty is off around 73 points from the lows. It did see a slip from those levels and again has recovered, but is steady around the 22,330 mark. We'll have to see which way things go in last couple of trading hours as well. Mid-caps, they are underperforming, but again, it was down around 1,100 points at a point in time. There's been a massive recovery from the lows, and that one is down 582 points right now. So at the initial take only, we saw that recovery come by. In terms of sectoral gainers, it's only the CPSC index and the energy index which is doing well. Be it any other name, be it Nifty Media, IT, financials, banking index, all of them are lower today. But yes, that's the mood of the market. That's what we saw globally. And today, we are at least not decoupling from global markets.
You're right. Otherwise, it's been a one-way outperformance as far as the Indian equities are concerned. Like you mentioned, the recovery in the mid and small cap as well as the NSE 500 index. Small cap index, in fact, has gained a little over 2% from the intraday lows. The NSE 500 is up almost 1% from the intraday low. But this is our special segment, Mid-Cap Movers. We have Hormaz to take us to the mid-caps that are moving around in the session. Hormaz, over to you.
Decoupling is the word that is back in focus after it was out of the spotlight for a while now, and it's back in the reckoning after today's trading session. But choppy is the word that you can describe today's markets. You can start off with the top mid-cap losers, and SJVN and Laurus Labs are leading the charge there, 4% lower on both of these stocks. Tata Chemicals is seeing a bit of profit booking, as is Castrol after the stellar run that it has had over the last month or so, 5% lower there on Castrol as well. The sector that has been in focus is metals, and that is because of a whole host of issues with regards to Russia, the LME sanctions coming in as well, some note coming in from JP Morgan, and Nalco and Jindal Stainless there, and NMDC all trading with gains of around 2%. And Hindustan Zinc, after seeing its best week in multiple years, is seeing a bit of profit booking in today's trading session, 4% lower in Hindustan Zinc. There are some companies that came out with business updates on Friday and over the weekend. Senco Gold, 17% higher now, almost triple from its IPO price of 317. The Patanjali Foods and Kolte Patil not seeing a very good reaction to their own respective business updates. Some stocks that are doing well on the back of volume buzzers, and those will come up on your screen, and you can see Aster DM off the lows of the day but still 8% higher. CSB Bank, Bayer Corp not with substantial gains but trading with heavy volumes. Exide Industries and Anand Rathi also doing very well on the back of strong volumes. And lastly, some other gainers in today's session, those are bucking the trend in the broader markets. Those are Thermax, HEG, Ramakrishna Forgings, and Capri Global has surged to the highest point of the day, almost 11% higher on the charts today. Back to you.
Despite the advanced decline ratio being in favor of declines by a huge margin, there are a lot of gainers in the broader market. So thank you so much, Hormaz, for bringing us that list. It's time to do a technical check on the market. So let's welcome Ashish Kyal of Wave Strategy for just that. Ashish, good afternoon. Thank you so much for joining us. Well, is there more recovery underway from the lows, or do you think we'll consolidate around these levels?
Hi, afternoon to you and all the viewers. If you look at Nifty in the opening hour itself, Nifty formed a low somewhere around the zone of 22,260 and showed some kind of a bounce back, but the gap filling has still not happened. The big gap that we have between 22,500 is still protected. So I think we will consolidate right now. Over short-term market looks to be sell on rise. We might again retest the level of 22,250 on the downside, and any pullback is going to be sold into. On the upside, the major hurdle is going to be around that 22,480, 22,500 mark. That's where we can see the call open interest has started building up heavily, and put unwinding is happening. So that is suggesting, the derivative data is suggesting crossing 22,500 is not going to be an easy task now. So sell on rise is the word right now. As long as 22,500 is intact, aiming for 22,250 on the downside.
Good afternoon, Aditya. Aditya, which are your top picks for today? Do you have any buy calls or any sell calls that you have in focus?
On the buy side, the first stock pick is going to be NMDC. We can see the metal space is buzzing. It's bucking the trend. The overall, even when the index in the broader market is moving down, it is moving on the upside with good volumes. So the trend is positive for NMDC. Long positions can be created here. Maintain a stop loss of 236, aiming for the target of 261. And the next stock on the buy side is going to be Hindustan Aeronautical Limited, HAL. Again, this stock has moved sharply on the upside over the past few weeks. We can clearly see that it was consolidating for some time, gave a good breakout yesterday, and today there is a continuation of the trend. Again, bucking the overall broader market sell-off, it is on the upside. So I think overall trend for HAL is positive. Long positions can be created here. Maintain a stop loss of 3560, aiming for the target of 3950 levels.
Okay, all right. Thank you so much, Ashish, for joining us. So that's a technical check on the markets. Hindustan Aeronautics, one of the picks by Ashish as well. Let's do one thing, slip into a short break now. When we come back, Aditya Velekar from Axis Securities will join us to discuss the move that we are seeing in the metal space, what's happening there as far as the global markets are concerned as well. Stay tuned for that.
Welcome back. Let's now put the focus and the spotlight on the metal space as global worries weigh on the commodities market. Aditya Velekar, the senior research analyst at Axis Securities, joins us now. Good afternoon, Aditya. Aditya, there's been a lot of news flow over the weekend in terms of Russia being asked to stay away from the LME exchange. A lot of news flow in terms of price action in the commodity space. How have you seen that? Number one, and main question is that what has been Russia's contribution in that particular exchange itself, and what will be the derivative impact that you see on Indian companies?
Yeah, so Russia almost contributes 6% of global aluminium supply. So that's a sizable number, and 5% of global copper supply. So the impact will be mostly on the supply demand disruption, but it will be a short-term impact. Over a medium term, this Russian metal will be flown to the trade import barrier neutral countries like China. So the metal will flow to China at a discounted rate, and the supply demand balance will be maintained. But near term, we expect a volatility in aluminium and copper prices. So since yesterday, so today aluminium prices have increased to level of $2,600 per ton, and we expect this to remain slightly volatile in the near term, maybe at an elevated level. And then as the trade supply normalizes, we expect the prices to slightly settle down in the range of $2,400 to $2,500 per ton.
Okay. Aditya, thank you for that. If I may also ask, what is the contribution in terms of nickel? Because as you said, aluminum is around 6%, copper is around 5%. Is nickel also a big contributor here? And secondly, which are the stocks which will be in focus in case you're talking about short-term volatility? Is this something that the investors should keep on their radar in terms of movement?
Yes, nickel is also, Russia is a major producer of nickel, and 6 to 7% of supply globally of nickel comes from Russia. Norilsk Nickel is one of the major nickel producing company in Russia. So we expect a significant volatility in nickel prices. So from a stock perspective in India, we see this overall, the setup for base metals is very positive. So we have seen recently that aluminum prices have increased from the level of 2,200 to 2,500, $2,600 per ton. Then zinc prices, copper prices have also increased. So there are a host of reasons. Number one is it the PMI prints from China. Those are slightly on a positive note. Then there are some production concerns in Yunnan region, so that was supportive for aluminum prices. And the trajectory that the Fed will reduce its interest rates going forward. So all these were favorable for this base metal pack, and that has all these host of reasons have flowed in as a positive news flow for this pack. And aluminum, copper, zinc, all these prices have found support. And this is mainly beneficial for Vedanta, Hindalco, Nalco. So all these base metal companies, the share price have also reflected the corresponding increase because of all these positive news flows in the past month. And I think we further foresee some valuation comfort in with respect to Vedanta because uh, fundamentally also the company has levers like they have deleveraged their balance, they have restructured their debt, and the kind of commodity basket they have exposure to oil, zinc, then aluminum, and all their expansion projects will fructify in FY25. So Vedanta still look even at this level, it has some levers and legs to go up from at this level also.
Aditya, just to come in there, can you or would you be able to give us a sense of the sensitivity analysis in terms of, what will be the impact on, let's say, a Vedanta, a Nalco and a Hindalco, with every jump in aluminum price that you're seeing? And you said that at current levels, you still see valuation comfort as far as Vedanta is concerned. Your view on Nalco as well as Hindalco?
So Nalco is pure play aluminum and alumina play. It's the only company which have exposure to alumina. So alumina prices have also slightly increased. Hindalco is a combination of aluminum and custom copper. So Vedanta is a conglomerate. It has exposure to multiple base metals like zinc, aluminum, oil, and then it has also exposure to steel. But most of its commodity exposure, that is oil, base metals like zinc, copper. So all these are in a positive trajectory. So Vedanta has more levers to play out. And as I said, its balance sheet is also, we foresee that its debt restructuring will happen, and that gives some comfort on its valuation from valuation perspective. For Hindalco, the only monitorable is the uncertainty towards Novelis IPO, that we have to understand from the management that how they use the proceeds from the Novelis IPO. So that may act as one of the key monitorables for the stock going ahead, and also potential risk if the outcome from that IPO is not against our expectation or favorable. So that's our view overall of the base metals.
Okay, all right. Aditya, thank you so much for joining us today. We had some more questions, but we are out of time today. But thank you so much for joining us and making sense of the rally that we are seeing, or the volatility, I would say, in some of these metal prices and the geopolitical setup as well. We'll do one thing, we'll slip into a break. As we do that, we have an announcement to share with you all. We are launching CNBC-TV18's first ever live personal finance webinar, CNBC-TV18 Accelerate Personal Finance Handbook with Sonia Shenoy, where she'll be joined by 3 well-known experts on Saturday, 11th May, 9 a.m. onwards. We'll be diving into everything you need to know to master your finances and learn how to grow your wealth, be it insurance, tax saving, managing your portfolio, retirement planning. There's lots to do and lots to learn. Whether you're in your 20s, 30s or even 40s, this live webinar is for you. We have limited seats, so do not miss this chance. Register now. Scan the QR code to register or log on to CNBC-TV18.com, and we'll see you on 11th of May. Welcome back. You're still tuned into Midcap Radar. Well, the Ministry of Power has taken steps to ensure availability of power during high demand period. This is our segment Midcap Spotlight. Vivek, we'll focus on power stocks, but tell us first up, what are the steps that the ministry has taken to ensure there's uninterrupted power supply in this scorching heat that we are talking about?
Like you mentioned, the main worry that the Ministry of Power has is how do they get prepared for the scorching heat. So the upcoming summer season is the peak season. That is the season in which the demand is the highest. last year we saw records being beaten in terms of every day how the peak demand or the peak deficit kept going higher. So on the back of that, there has been some proactive steps that's been taken. First up, we look at gas-based power plants. So what the Ministry of Power has said is that gas-based electricity generating plants have been asked to operate under Section 11. Section 11 basically means that this is under emergency measures where there will be a cap on the kind of returns that the gas-based power plants will actually be operating at. The move is mainly, like we mentioned, to ensure availability of power from gas-based generating stations during the high demand period, and this particular move is valid from May 1st, 2024 to June 30th, 2024. And like expected, the impact of this will mainly be on NTPC and Torrent Power, which has close to 1.5 gigawatt of stranded gas power plants, which they could bring into impact. Now, talking about coal-based plants or thermal power plants, Section 11 is already underway, and there has been an extension of these measures. So, top impacted company would be Tata Power. Remember, Tata Power has a coal plant functional at Mundra, and they at this point of time do not have any long-term PPAs. So once they operate under Section 11, they are able to go ahead and make the minimum required returns for this particular facility. So this particular measure for coal-based plants is extended up till 15th October 2024.
Okay, so this is about what this section really means. So thank you for the explainer. But of course, the next question comes is, what is the impact on the power sector as a whole if we talk about individual stocks, and some names that you can give us?
Okay, so the first talk or the first impact, let's look at it for the gas-based power plants point of view. So number one, gas IPPs or gas independent power producers, that will be in focus. There are quite a few PSU companies that do have gas-based facility, but the stock that we could focus on right now is Torrent Power. Torrent Power has 1.5 gigawatt, like we mentioned earlier, of stranded capacity or of free capacity. So what does this particular move do for the power sector? The move will de-risk the grid India's reliance on thermal power to go ahead and meet peak demand. Remember, India has almost 25 gigawatt of gas-based power capacity, which are just operating at close to 14% plant load factor or PLF. So this will significantly ramp up as Section 11 comes into impact. The expected impact is obviously the fact that most of these companies will actually start operating at higher PLFs. Now, we have a report from IIFL on this particular development. They are saying that key beneficiary, of course, would be Torrent Power, given that they have a merchant capacity of 1.5 gigawatt. The move will also improve the commercials of stranded IPPs, which are currently not being functional. They're making an assumption that if Torrent Power's facility could operate at close to 35% PLF at the current gas prices, it could add close to 12 to 15% to their FY25 profit before tax. So that's a significant impact. However, they also, IIFL also states that the market may have been anticipating that Torrent Power could have sold this particular capacity in the open market or in the, in merchant market, where they could have got higher prices. Currently, remember, prices will be capped. So on the back of that, you are seeing Torrent Power in focus today. It's been a volatile move for the company. They're also saying that, if this particular scheme is extended for FY25, it can benefit gas-based importing as well as trading companies, which include names like GAIL as well as Petronet LNG. They may see 5 to 10% EPS upgrade is what IIFL believes. They also see IEX benefiting from this on the back of higher volumes that the gas exchange could see.
Okay, all right. So that's an exhaustive list. Thank you so much, Vivek, for joining us with that. We keep getting it updates. So for Container Corp, the total volumes for Q4 are up 11.2%. And the domestic volumes are up 16%. So far it looks good, but of course we'll have to see the internals, whether there are any one-offs. But right now the stock is holding up higher by 0.5%. It has actually surged to the day's high, so just watch out for that. But it has missed FY24 volume guidance for both EXIM and domestic volume. So it has come in at 7% versus a guidance of 10%. So the stock is surging on Q4 numbers, but do remember it has missed its FY24 both domestic volumes and EXIM volumes guidance. So that's Container Corp. But we have the other stock on our radar, which is ISMT. It is up around 5%. There's a contract win that the company has seen. Nigel is here to tell us more. Nigel.
Well, that's right. ISMT, they have won 2 contracts from ONGC. The total value is around 344 crore rupees odd, and it's for the supply of regular casting pipes as per specifications. The timeline they need to execute this is within the next 1 year, Rod. So they've given the dates from April 2024 till around Feb 2025. Now this is good news for them. Why is that? Because it provides volume visibility in terms of volume growth and volume growth security from year on. The second factor is, they are increasing their capacity. Remember, if you look at the nameplate capacity, it looks quite large. But they've been gradually debottlenecking their capacities. And the debottlenecking of those capacities will come into good use with this order win. What's the analyst feedback? Well, they're saying with this order win itself, which they will be executing in the next 1 year, it provides them some visibility of volume growth of around 10 to around 12%. Remember, they were guiding for volume growth of close to around 15%. So with this order win itself, they're pretty much in the bag in terms of their volumes. Not just that, the oil and gas segment, it contributes early teens to their total mix. Now, with this particular order execution, well, it will go up to around 25%. And what that does is, it braces them for larger order wins, both domestically as well as in the international market, which holds them in good stead. So it's good for our ISM team, and it's also good for Kirloskar Ferris, because both these two are in the process of getting merged. Back to you guys.
Thank you so much, Nigel. As you can see on your screens, the slight bill by Container Corporation or Concord in terms of its volume growth guidance has made the stock move to the lowest point of the day. But the next stock in focus actually is Aster DM Healthcare. The company has gained as the board has received and has approved a special dividend of close to 118 rupees a share. Earlier today, we spoke to Nitish Shetty, the CEO of the company, to discuss this and also on the company's business plans going forward. Let's listen in to what he had to say.
80% of the sale proceeds will be dividend out, a special dividend at 118 rupees per share, and around 1,500 crore will be retained within India. The future of the 1,500 crore, how we want to use it, will be decided in the near future by the board. Because as I speak now, we have clear-cut plans for our expansion in terms of deploying 1,700 beds in 3 years. This we are going to do with our own internal accrual because we have enough cash flow happening because most of our hospitals are matured now. For inorganic growth, we might consider this retained amount of 1,500 crores, or we might leverage on a share price, which is doing well, as you are aware of now. Like I mentioned earlier, we have clear-cut plans of in the next 3 years of rolling of 1,700 beds. Presently, our capacity is at 4,800 now. We are planning to add 1,700 to take it to 6,600 beds in next 3 years' time. That is through organic route. Most of the bed addition will be happening through brownfield expansion. We are also expanding in Bangalore, and we are also looking at opportunities in Maharashtra, cities like Pune, and also up north in UP, in Lucknow. They have around 10% now. They were at 19%. Now they have 10%. But I will not be able to comment on the Olympus plan. But as far as we are concerned, they have been a very supportive investor with us.
Okay, that's about Aster DM. The stock is doing well in an otherwise weak market. Anand Rathi is also on our radar today. The stock is trading higher after it exceeded the FY24 guidance, both in terms of revenues and net profit. Earlier today, we spoke with Firoz Aziz, the Deputy CEO of the company, to discuss the numbers and the outlook going forward. Listen in to what he had to say.
We had said that our aspiration is to bring it to 50-50, 50 trail, 50 upfront. And that's what we are inching towards. And if God is kind, we'll get there. But we believe that when you make a statement, then you have to put your professional best to get there. And I think a larger growth in the trail revenue implies that you're inching on that gap and closing it and narrowing it. That's point one. Point two, from a third-party perspective, predictability, only answer to predictability is trade revenue for a shareholder or an analyst. But from where we see it, our business is very predictable because even a structured product business, 80% of the money gets reinvested. So if I sell a structured product to a client, if that matures after 5 years, doubling the money, double the money, and minus the tax gets reinvested more or less. So for me, there is predictability, not just in trail revenue, there is predictability in the upfront revenue as well. From an RM standpoint, the number of clients we like to add, in fact, our aspiration has been 200 clients net addition per month. That's been our aspiration. And in fact, not a guidance at all. Our aspiration is to get to 1 new client per RM per month. That's 330. That's our aspiration. It's a dream. We've not been able to achieve that for 6-7 years, but I'm just slating the internal target, which is there in the heart. We don't have a leaking bucket. This is the third consecutive quarter where I don't have one regret attrition of an RM. That's because we all have attached ourselves to one objective, which is client benefit.
Some very interesting insights coming in from the management of Anand Rathi. But that's all the time we have on this edition of Midcap Radar. Your stocks when we return.